If you're watching this video, there's a very good chance that you or someone close to you is either already collecting Social Security, preparing to claim it, or trying to understand whether the system is actually paying everything you earned over a lifetime of work. The problem is that Social Security does not follow the same rules for everyone. Your full retirement age, your claiming options, your survivor benefits, your Medicare costs, and even the mistakes that can permanently reduce your monthly check all depend on the year you were born and the decisions you make at specific times in your life. And in 2026, millions of people are making these decisions without fully understanding the consequences. Some are locking themselves into smaller monthly payments forever. Some are overpaying for Medicare because they don't know an appeal exists. Others are missing benefits they legally qualify for simply because nobody ever explained the rules clearly. That's exactly why this video matters. Today, we're going through the different Social Security groups based on birth year so you can understand what applies specifically to you, what mistakes to avoid, and what actions you should take right now before important deadlines pass or permanent decisions get locked in. Before we begin, make sure you subscribe to the channel and turn on notifications because Social Security rules change constantly. Income limits change, Medicare premiums change, retirement rules change, and the Social Security Administration does not personally contact you to explain what changed or how it affects your money. They update policies quietly, and most people only discover those changes after they've already lost benefits they could have protected. On this channel, the goal is simple. Take complicated Social Security updates and explain them in plain English so real people understand what they need to do before it's too late. Now let's start with the first group. If you were born between 1944 and 1955, you are likely in your early 70s to early 80s, and many people in this group assume their Social Security situation is already finalized because they've been collecting benefits for years. But that assumption is costing some retirees real money every single month. One of the biggest issues in this group involves survivor benefits for widows and widowers. Thousands of people are currently collecting their own retirement benefit when they would actually receive more money based on their late spouse's work record. In many situations, survivor benefits can equal up to 100% of what the deceased spouse was receiving, and the difference can be substantial. The problem is that the Social Security Administration does not always automatically place someone on the higher benefit. Many retirees assume the system checks both records and automatically chooses the larger amount, but that doesn't always happen. If your spouse passed away and you never specifically asked Social Security to compare your own retirement benefit with survivor benefits, you may have been underpaid for years without realizing it. Another major issue affecting this group in 2026 involves Medicare premiums, specifically IRMAA, which stands for Income-Related Monthly Adjustment Amount. Medicare often uses income information from previous years to determine how much you pay for Part B coverage. That means if you sold a property, withdrew retirement investments, completed a Roth conversion, or experienced any temporary increase in income a few years ago, Medicare may still be charging you a higher premium today even if your current income is much lower. Some retirees are paying hundreds of dollars extra every month simply because they don't know they can file an appeal. There is a form called SSA 44 specifically designed for people whose income changed because of retirement or other major life events, but many seniors have never heard of it. If your Medicare premium feels unusually high, don't assume it's permanent. Ask Social Security exactly how your premium was calculated and whether an appeal applies to your situation. Now let's move to people born between 1956 and 1960. This group is especially important because many people here are either making Social Security claiming decisions right now or recently made them, and mistakes at this stage can permanently reduce retirement income for the rest of your life. One thing many people misunderstand is that full retirement age is not automatically 66 or 67. It depends on your exact birth year. A difference of just a few months can affect how much you receive for decades. If you claim benefits before reaching your full retirement age, your monthly payment is permanently reduced. For some retirees, claiming early can reduce benefits by hundreds of dollars every month for the rest of their lives. On the other hand, waiting longer after full retirement age increases your monthly benefit through delayed retirement credits. Those increases continue until age 70, and for many people, the difference between claiming early and waiting can add up to well over $100,000 over the course of retirement. Another important issue for this group is the earnings test. If you are still working while collecting Social Security before full retirement age, earning above the annual limit can cause the Social Security Administration to temporarily withhold part of your benefits. Many retirees panic when they suddenly receive smaller checks without understanding why it happened. The money is not necessarily gone forever, but the rules are complicated, and people who don't understand them often feel blindsided. Now let's talk about people born between 1961 and 1966. For this group, full retirement age is generally 67, and understanding what happens when you claim early is critical. Claiming at age 62 can reduce your monthly benefit by roughly 30% permanently. That reduction follows you for the rest of your life. Many people focus only on getting checks as soon as possible, without realizing how dramatically smaller those checks become over a 20 or 30-year retirement. There's also another option many people in this age range don't know exists. If you apply for Social Security after reaching full retirement age, you may be able to request up to 6 months of retroactive benefits. That can create a large lump sum payment when your claim begins, although it slightly reduces your future monthly benefit because your official start date moves backward. Most people never hear about this option unless they specifically ask. Another critical task for this group is checking your earnings record. Social Security benefits are calculated using your lifetime earnings history, and errors in that record are more common than most people realize. A missing year of income, an employer payroll mistake, or incorrect self-employment reporting decades ago can reduce your retirement benefit permanently. That's why everyone in this group should create a My Social Security account and carefully compare their recorded earnings year by year against tax returns, W-2 forms, or old records while those documents are still available. Finally, let's talk about people born in 1967 or later. Many people in this group believe Social Security is too far away to worrying about right now, but this is actually the best time to protect your future benefits because you still have time to correct mistakes before retirement arrives. Your full retirement age is currently 67, and claiming early at 62 can still reduce your monthly benefit by around 30% permanently. But the most important issue for younger workers is making sure your earnings history is accurate. Social Security has been tracking your income since your first job, and every employer payroll report created another opportunity for mistakes. A missing year, incorrect earnings amount, or improperly reported self-employment income can reduce your future retirement check substantially. The longer you wait to fix those errors, the harder it becomes to find documents proving what you earned. Old tax returns, W-2 forms, and pay stubs are easier to locate today than they will be 20 years from now. That's why everyone in this group should log into their Social Security account, review their earnings history carefully, and correct any problems. Now, while the process is still manageable, at the end of the day, the biggest mistake people make with Social Security is assuming the system automatically protects them from errors or automatically gives them the highest possible benefit. In reality, the responsibility falls on you to understand the rules, ask the right questions, and verify that your records and benefits are accurate. The people who take the time to understand these rules often protect tens of thousands of dollars over retirement, while those who ignore them frequently discover mistakes only after it's too late to fully fix them. That's why staying informed matters. Subscribe to the channel, share this video with someone who needs it, and make sure you understand which Social Security group you belong to before making any major retirement decision in 2026.